I mean, banks use this product to.
No, they do not. You've been watching too much TikTok. Banks do not use whole life. Not ever. Banks nowhere. No banks sell.
I would respectfully disagree.
No, they don't. They do not use whole life insurance. Let me tell you what banks do. They put it in bonds. They're required to. They wouldn't be allowed by federal regulations to put it in whole life. It's not a place to invest money because it's a horrible investment.
Well, BOLI stands for bank-owned life insurance. And BOLI is a great product or a great asset for a bank to buy. When a bank purchases BOLI, it's a single premium investment contract. The bank's actually the premium payer, the beneficiary, and the owner of the contract. The asset itself is a great earning asset that banks can use to offset the existing benefit expenses that they have with their employee benefit plans. And those are things like what they're spending on healthcare, 401k matching, vacation days, sick days. Basically, any benefit expense that they have for their entire population is something they can use to offset through the income from a BOLI plan. Once the bank makes the decision to purchase BOLI, they're going to insure a group of their officers. And most of the insurance policies are done through a guaranteed issue structure, which means the bank doesn't require their employees to do any medical testing or any underwriting. At that point, once the contract's ready to go, the bank's going to wire money to the insurance company. The insurance company is going to invest that money either in their general account or a segregated account. And then the carrier earns a return on those dollars. They're investing in assets, some of which are just like what the bank buys, treasuries, agencies, mortgage backs, things like that. And then some of the other things they do are private placements and or corporate bonds. But the bank carrier is going to earn a return. They're going to deduct their expenses for providing the contract. They're also going to take out the cost of insurance, which is specific to each contract. And then from there, the bank receives a net return. And that net return is tax-free. And as a result, the bank's able to earn a return on it that's greater than what they're going to get on traditional assets that are inside their portfolio. Experience has been that banks earn somewhere between 100 basis points and 200 to 300 basis points more than they would get on the other assets in their portfolio. Another reason that BOLI works so well is and the regulators approve it and are comfortable with the asset is it's designed to be a performing asset for the bank. The bank's not depending on BOLI and the income from the life insurance to be where they get their benefit. It's designed to deliver a return on an annual basis, and that tax-free return compounds year by year. And one of the reasons that works so well is it's designed to have a low cost of insurance relative to what you might get with other insurance products that are out there. Some of the misconceptions about BOLI. Number one is a lot of times board members and management will think of BOLI and the life insurance aspect of it as if it works like traditional individual life insurance contracts. And so when they think about that, they think about the high insurance values that are in the contracts. Well, what's different about BOLI is it's designed to have high cash value and low insurance component. Now, it's structured to where you still get the tax advantages and it still qualifies as life insurance. But instead of $1 of premium buying, say, $20 of death benefit, in a BOLI contract, $1 premium is going to buy about $3 of death benefit. What that's going to do for the bank is it's going to lower the cost of insurance in the contract and allow for a cash value buildup in the contract, which they're recognizing tax-free. And then the compounding effect of that makes it really work. So when a lot of bankers think in terms of what the contract would be if it was personal, they miss how the contract's going to really work for the bank.